Morning. Thank you for joining us. Do you think markets, both local markets and global markets, are underestimating the impact of this sell-off in crude? Crude going to, I mean, now technically I can say that water is more expensive than crude. How bizarre is that? But that's the real shape of the world. On paper, I can say crude going down is great news for India, but that is also a problem for banks, oil companies, oil drilling companies, supply chain, logistics. I mean, there could be a serious case for bankruptcy now for a lot of companies.
Yeah, just to add to so many factors that you mentioned, that while oil going down is broadly considered positive for India, but there are other effects to add to those. Is also the fact that we have quite a part of our international trade with the oil producing economies, especially Gulf. Let's also keep in mind that a large part of Indian diaspora works in Gulf and remits a lot of money. And of course, they are getting the jobs there. So all these things also come under risk when the oil economies go down because of the oil price fall. Coming to the impact on the market, a market is currently getting affected by a lot of factors. So we have been seeing the COVID impact continuing on the market right from the mid of February to March, fall, and now rise. So that is something that continues. We have specific to India, we have seen the result season starting. So we are going to see the impact of that on more and more individual companies. And now this oil thing has come in. I think what market is watching is probably to see a more medium-term trend on the oil prices instead of these sharp volatilities which happen intraday and even interday. So while the broad trend has been of the oil coming down, but yes, the fact that the negative prices or the zero prices are not something which are sustainable, and the difference between the various oil benchmarks that is there, which shows clearly that those are not the prices, those are sustainable, and that's why market is not taking those into account. Yes, on a sustainable basis, if market sees that the oil has fallen down to remain in single digit price, then that is where we will see the impact of oil coming into the market. But as I said, I don't think right now that is the case.
Where do you think, Kunj, this market right now runs the risk of running ahead of themselves, and optimism of a V-shaped recovery is slightly over-exaggerated? Because we are not at bombed out levels. A lot of important pockets in the markets are up 20, 30, 40%. Some pharma stocks even are at a 52-week high. So where do you think then in this market, liquidity has changed the opinion, and those stocks do not deserve to come back so smartly or sharply?
Yeah, so few things. One, of course, it's always difficult to predict the direction of the market, especially in the short term. We all know that. But yes, despite that, that is our job, to keep analyzing the factors and keep trying to think and see what is possible. And so that's what we try to do. Before I come to exactly try to analyze that where are we headed from here, very quickly, historically, not historically, but last few months movement, which is already known to us, that we had a sharp 40% movement in a period of about a month. And that was on the basis of the fact that probably the impact of the COVID in economic terms, in commercial terms, was not being able to be quantified. And that's why we saw such a sharp fall. From there, we have seen a equally sharp recovery of almost 20-25%, again, within a reasonably short period of time. Now, clearly, both of these movements, the fall as well as the rise, in the short term, if these kind of movements happen, they have to be governed more by the money flow, more by the demand-supply imbalance, and less by the fundamental factors. And that exactly has been the case here. Now, after having risen 20% from the bottom, market is trying to find some level that, okay, taking into account the mix of the slowdown impact of COVID that will be there on the economy and the corporates, countries, the companies, the fact that money flow across asset classes has been changing and will keep changing. Let's also keep in mind that there are not any asset classes, those are left. So gold is something that has been going up, but at the same time, oil is something that has been coming down. Interest rates have been coming down. So the money movement across asset classes is not very clear. And in such case, if money continues to come into equity now, or starts to come in a quantum higher than what it has been coming in across the globe, both abroad as well as in India, then the fact of, again, short-term money supply is something that will start driving the market, which, as I said earlier, seems to have driven the market. I think market if I were to, if at all, put my head on the chopping block, will now gradually move into a range-bound movement. Having risen 20% plus, probably the short-term trend will be the downward bias, but more of it will now be governed by the result declaration of the companies instead of the broader one-way direction or the trend of the market. So that is what I think we should brace ourselves up for in next few weeks.